Hey everyone, it's Austin Solomon, the Solomon Group at Coldwell Banker. Welcome to this week's episode of The Real. Today I'm joined with my business partner, Matt Mullen. Matt?
How you doing, everybody?
Great. Doing well. Thanks for tuning into this week's episode of The Real. Today I'm going to ask Matt some questions. Matt's been doing a lot of investment real estate. You've helped quite a few investors over the last couple of years, but specifically even in the last couple of months, you've done quite a few investment deals. Wanted to pick your brain, and I think that would be valuable for our audience to kind of know some of the trends of what you're seeing out there.
Absolutely.
Yeah. So first question is, tell us about like which price points are probably the most active when it comes to investment real estate.
The lower the price, the more people.
That's right. Yeah.
As I sum it up, it just gets a lot of people in. Some people that are potentially looking to fix their first home as well.
Yeah.
So the cheaper the ones are flooded.
That's right. Yeah. And some people might be, well, obviously that opens it up. Some people can't afford maybe a higher end home or a investment, but the less expensive, typically investment property, maybe the more popular.
Oh, absolutely.
Yeah. What kind of things do you, when you're looking at an investment with a client, what kind of things are you talking them through, like to where they're deciding if it makes sense for them or not?
Mostly the profitability, if it's worth the investment, how much work they're gonna have to put into it, as well as the rentability with the tenant.
Yeah.
And how much they'll get in the long run.
Yep. Let's break that down. So talk to us about like how do you decide how much work a property needs? What things are you looking at?
Big ones is you got roof, furnace. Windows are pricey as well, siding,
Yep.
big foundation issues.
Yep.
These are what we all look at.
Small foundation issues are okay though? I'm totally I'm totally messing with you.
Not usually.
Oh man, I'm just messing with you. Yes, that's great.
Foundation's problematic.
Yeah, exactly. You want a good structure for sure. Yeah. Yeah, no, absolutely. Like looking at the bigger things. Rentability. How do you know? I mean, how does someone know like what something could rent for?
Well, it goes based on the current market and the surrounding area.
Yep.
What area it is, you got a 4-bedroom house, that's a lot different than a 2-bedroom house.
Right. Yep.
So
Size,
size is a big one.
condition. Yep. Yep.
Area. So
Yeah. What would you say to like? Let's say that there's a property that comes on the market. It's $200,000, and it's pretty nice. It's a side-by-side duplex, and you go and show it, and it looks nice. Both of the tenants have been there 20 years, and they're paying $450 a side for rent. Now, what would you tell an investor in that case? Let's say they're month to month. What kind of things would you explain to the investor in that scenario?
Investors at that point, we gotta look at the leases.
Yeah.
The terms of the leases. And we find that there's certain people that have been there 30 years and you see that the rent's, $500.
Yep.
And the neighbor's going for $1,000.
Right. Yeah. So in that case, it might be wise to look at the lease, make sure that, well, obviously it's never fun for like someone to move out or kick someone out. But obviously if it's a month to month lease and, it's way under market value, if the new buyer is probably going to have a conversation with those tenants about adjusting the rents to market value or they may have to find a new tenant.
Basically, that's the number one thing investors look at on the higher price tag.
Right. Yeah. No, that's good. Give us a couple things. What have you kind of seen as far as the rental market? Have you seen a lot of investors in the market? Not as many?
There's a ton of investors in this market.
You've navigated. You've found a way to kind of get investors accepted offers on property. What's kind of the key been for you and your investors to, like some of the investors that you have worked with, what's been the key to getting an accepted offer? I think I know the answer on the outside because I've seen how hard you work to get them in, but you tell me.
Number one, cash is king.
Yep.
I would say with any of these places that if you can close earlier, we'll cut that part out. Cash is king, number one. We gotta be in there right away.
Yep.
And there's a lot of smart investors in this town, in this area.
Right.
And there's not enough rentals.
That's right, yeah. What else? So cash is king. What about approach?
Well, we have to get there right away. That's number one. Some of these places, they're gone in a day.
Okay, Matt, so tell us a little bit about, recap again, like what has been successful for your investors. Obviously, like you said, you want to get into the property right away. Cash is king. Anything else when it comes to like writing offers and trying to beat out potential other investors?
Number one, no inspection. That makes a critical difference.
Yep,
You know, it just makes a potential seller feel a lot better, it's a lot quicker.
yep.
No inspection is, it gets you really there.
Now, for a caution to our viewers, some of the investors that you work with, they're very familiar with real estate. They've done other deals. They know what they're getting into. Obviously, we always recommend a buyer does an inspection, but a lot of cases, you know, if a buyer really has a good knowledge of the property and construction, right, they may be comfortable not doing an inspection. But
A lot of these flippers on the cheaper end,
yep,
they look everywhere, they know what to look for right away.
right, yep.
You know, they know what they're getting into.
Yep.
They're taking a little more risk.
Exactly, right, yep. But for an everyday home buyer, obviously, you know, doing an inspection is certainly a wise decision. For someone that knows what they're getting into, has done it before, they know construction, that's a little bit different, so that's absolutely right, so.
I always
Well,
feel-
go for it.
I always feel better for any buyer to do an inspection. 'Cause
Yeah.
I feel like they're more comfortable, you know, and I don't want anything to happen to them.
Yep,
So it just kind of gives them that warm fuzzy feeling.
exactly, they know what they're getting into. On my end, what I've seen has been good is Matt has, like, a lot of times, you know, there's like 30 people going to look at a property, but that doesn't shy away. Like, you just go and show it, you make an offer, and a lot of times it's worked out for you. That's been one of the cool parts about me seeing you on the outside, is that maybe like some agents would be like, oh, like, you know, it's a $50,000 property and there's probably like 40 people looking at it, but that hasn't shied you away from just being like, well, yeah, let's go look at it, let's make an offer, and let's like try to make something happen.
You know, for an investor, it's gotta be worth their time. One big thing is, you know, if they see 30 people going into a house, it doesn't hurt to see what you're going against.
Yeah,
If you're going against 13 bids versus 3 bids, it may be worth your time.
it may be or may not be.
It's way more worth your time at that point.
Oh, for sure. Yeah, I agree. Yeah. How many bids are in? But you sometimes are one of the first bids, so you may not know.
Yeah, well, sometimes, but sometimes you take a risk, it's that good and you just wanna seal it.
That's right. Hey, thanks for tuning into this week's episode, guys. A little bit about rentals and talking with Matt about the local rental market. If you guys have any questions, hit Matt or I up. We'd be happy to help you out and see what we can do for you.
Thank you, everyone.